Imagine you and your friends want to invest in a big chocolate factory, but none of you can afford it alone. So you pool your money together and hire an expert to manage it for you. That's exactly what mutual fund does, but with the stocks, bonds, and other assets. What is mutual fund? A mutual fund is a professional investment where the many people pool their money. A fund manager uses this money to invest in a stock, bond, or other assets. You don't need to pick any stocks, the expert does it for you. Types of mutual funds. There are many types of mutual funds based on where the money is invested. For example, the equity funds. This is where the money is invested in the stocks, which is kind of high risk and high returns. Next one is debt funds, which is nothing but the money is invested in the government or corporate bonds, which is kind of a lower risk and stable income. There is another one called hybrid funds, which is nothing but the mixture of these equity funds and the debt funds, which is kind of a medium risk and medium returns. There is another type of mutual funds which is called ELSS, which is nothing but the full form of equity linked saving schemes. The equity funds that gives you some tax benefits under the ATC. Like this, each fund has a different purpose. Some for long term, other for short term safety. The another important question. I invest some 1,000 rupees in some mutual fund and what happens next? How I earn in the mutual fund? So how the money will be appreciated? You earn in two ways. One is the capital appreciation. Next one is dividend yields. Let's see what is capital appreciation. For example, you continue to invest 1,000 rupees each month for the next 2 years. You will be invested the 24,000 rupees for 2 years. If the market goes well, the money will be appreciated. In that case, the amount you invested, the 24,000 rupees, may just go up to 30,000. The differentiate amount is called as capital appreciation. Next one is dividend. Some funds directly pay out the dividends to the investors regularly. You can check your mutual funds pay out the dividends regularly or not when you just going to invest in the particular mutual funds. And let's see what is SIP. SIP is nothing but systematic investment plan. You can invest 1,000 rupees, for example, 1,000 rupees for next 2 years or 3 years. On every month, on the fixed date, the amount will be debited automatically from your bank account and it will be directly invested in the mutual fund you choose. You need not to have so much of money to invest in the SIP kind of mutual funds. With a minimum of 500 rupees, you can start your mutual fund journey. It's like putting your money in the piggy bank but in a smarter way. Over the time, the small amounts we invested go into the bigger amounts. This is called compounding. Now let's see what are the risks and things to remember. Now like lot of investment, the mutual fund also carries some risk. If the market falls, the value of your fund can fall too. However, since your money is spread across many companies or assets, the risk is lower than investing in just one stock. Here are the few tips before you invest in mutual funds. Always read about the fund, check the returns, risk level, and about the fund manager. Use trusted platforms like your Grow, Zerodha, or other AMC websites. If your bank supports, you can also invest in mutual funds through your bank. Choose funds based on your goals, long term, short term, or higher or lower risk. To sum it up, mutual funds are one of the best way for beginners to grow their money. You don't need to be a stock market expert. You don't need lack of rupees. You don't need to stress about the market every day. Just start small, stay consistent, and let the time do its magic. If you found this video helpful, hit that like button and subscribe for more simple finance tips every week. And tell me in comment section, have you already invested in mutual fund or are you planning to start soon? Please let me know in the comment section below. Thanks for watching. I'll see you in another video. Bye bye.